Okay, sir. Good evening and very warm welcome to everyone present today. On behalf of the Members in Practice Committee of ICAI, jointly with SAFA Small and Medium Practice Committee, I extend a heartfelt welcome to our distinguished dignitaries, eminent speakers, respected members of the profession from India and SAFA countries who are joining us today. We are privileged to host today's webinar, a highly contemporary and practice-oriented theme, a newly started webinar series on electric mobility, sustainable finance, and future-ready practice, emerging opportunities in India and SAFA countries. Electric mobility is not longer a distinct or distant future. It is a fast emerging economic environment, technological and financial transformation. Across India, South Asia, the shift towards cleaner transport, charging infrastructure, and changing infrastructure, climate finance, sustainable supply chains, and green business models is opening new professional avenues for the chartered accountants and SMPs. For the accountancy profession, this is not merely a sectorial development, it is an opportunity to support enterprises in policy interpretation, investment structuring, financing, taxation, intricacies, incentives, risk advisory, ESG linked reporting, business modeling, and sustainable growth. Today's webinar has been thoughtfully designed to bring together perspectives from technology, policy, finance, business, and professional practice so that our members can understand not only the electric mobility ecosystem, but also the role of the future ready professionals can play in the transition. We are honored by the presence of the eminent dignitaries, experts, speakers who will guide us through the important subject. So, to formally welcome the August gathering, it's now my privilege to invite CA Madhukar Narayan Hirgange sir. He's the chairman to the Committee for Members in Practice. He's a highly respected name in the chartered accountancy profession, widely admired for his deep technical knowledge, practical wisdom, and ethical clarity, and continuous commitment to strengthening the practice ecosystem of chartered accountants. As the chairman of Members in Practice Committee, he has been leading several meaningful initiatives on empowering practitioners, especially small and medium practitioners, to become more competent, confident, technology oriented, enabled, and future ready. His leadership reflects a clear vision that the chartered accountant's profession must not only respond to change but must also be prepared to guide business through change. So we are always emphasize that emerging areas and value-based advisory areas for the profession, they are important pathways through the chartered accountants can serve society, industry, and economy with greater relevance. Sir, I now request you to kindly deliver your welcome remarks. Over to you, sir.
Thank you, Priyanshu. I think you have shared quite a lot of what I believe in. But I would say that, this particular program itself is one of the points where we didn't understand much about it. And when we were listening to Arunji, suddenly I thought, my God, I thought it is something which is not worth discussing actually. Let me tell you frankly, when you told us, but after I understood what it is about, my God, there's so much to learn in this world, and there are so many opportunities to contribute to the betterment of the world through sustainability. I won't speak much because we have a whole array of people, and I would also request, our SAFA president and vice president to keep their, message brief. I would also like to listen to the speakers for whatever time I can. I'm waiting for a flight to Bangalore. The moment they call it, I may have to go out. Welcome to all the speakers and Arunji, your team. Let me also get a glimpse of it today if possible. Thank you very much.
Thank you so much, sir, for your motivating words. So we now move on to the opening remarks of today's program. So it's now my privilege to invite CA Praveen Kumar Jha, sir. He's the Vice President of SAFA to, and for the year 2026, and the immediate past President of the Institute of Chartered Accountants of Nepal. He has served the accountancy profession with a distinction through various standing and not non-standing committees, boards, and professional forums. He has been a council member of ICI Nepal and has also contributed to the several SAFA committees as a member. His professional journey reflects strong engagement with audit compliance, governance, quality control, strategic advisory. He is also associated with important institutional responsibility, including his role as a member of the Audit and Compliance Committee of All India Nepal Football Association and his earlier role as a board member in Security Board of Nepal. As a senior partner of a chartered accountant firm in Nepal, he brings over 25 years of rich professional experience in due diligence, internal audit, statutory audit, tax audit, process, risk assessment, and advisory to corporate boards. His profile reflects the ideal combination of practice experience, institutional leadership, and regional perspective. I would now request CA Praveen Kumar Jha sir to kindly deliver the opening remarks. Over to you, sir.
Thank you, Priyansaji. Good afternoon and welcome, everybody. My sincere greeting to the SAFA President, Chair, and members of SAFA SMP Committee and ICA's Committee of Members in Practice, eminent speakers, and the Secretariat team, and all the distinguished personalities attending this webinar today. Firstly, I thank the committee for starting this new series of webinars that I understand shall be held every month. This committee is one of the most vibrant committees of SAFA, which has been doing a lot of effective leadership. It has a proven track record as reflected by the fact that it has been organized, have already attended more than a dozen of such series. Almost every week we are actually attending this. Today we are talking about a very relevant topic on electrical mobility, sustainable finance, and future-ready accounting practices. So we are actually talking about all aspects of this segment. I hail from Nepal, and I presume most of you are aware that we have a huge potential of relatively cleaner energy, mainly coming from ROR, run-of-the-river hydro projects. Leveraging this advantage and also due to regulatory support, the EVs for public and private use here in Nepal have evolved over the years, and we are already ahead of many other jurisdictions in the region for electric mobility. I know significant progress is also made in other jurisdictions in the region. Hence, electric mobility is no longer a distant ambition. It is rapidly becoming an economic and environmental necessity. At the same time, sustainable finance is redefining capital flows, accounting professions, and us accounting professionals are being called upon to lead in a world where transparency, resilience, and long-term value creations are paramount. I will not talk about the topic and let the speakers talk about it in detail. But I would like to mention one thing that our profession demands lifelong learning, and I believe those who continuously invest in learning, embraces emerging technologies, and expand their competencies beyond traditional financing reporting will find that opportunities brought about by these
Good evening,
developments
everyone.
far outweigh the challenges that we face. I will let the speakers talk. I look forward to hearing from the speakers, and I believe there will be some takeaways for everyone attending this webinar. I remain here. Thank you. Namaskar.
Thank you very much, sir, for your opening remarks. And we are now honored to invite the President SAFA for his words of wisdom. It's now my privilege to introduce Mr. Mohammad Himayu Kabir, sir, the President of SAFA. Mr. Kabir is a fellow member of the Institute of Chartered Accountants of Bangladesh and has more than 45 years of distinguished professional experience. Over the years, he has served business industry, professional institutions, and public policy platforms in several important capacities. He has been recognized for his contribution to trade, business, environment, including receiving the Environment Award from the Ministry of Environment, Forest and Climate Change, Government of Bangladesh, and being recognized as a commercially important person in export on several occasions. He has also been associated with important government committees, chambers of commerce, business associations, financial institutions, and listed entities. Mr. Kabir has served the Institute of Chartered Accountants of Bangladesh as a council member for 8 consecutive terms and was president of ICA Bangladesh in 2008. He has also contributed actively to the SAFA over the years, including the technical advisor of the SAFA board and vice president of SAFA in 2020-25. His expertise spans fiscal laws, financial management, business strategy, corporate governance, and microeconomic issues. His governance, his guidance is therefore highly relevant for today's theme, where the electric mobility, sustainable finance, and future-ready practice with policy, investment, governance, and professional opportunity. We are indeed privileged to have his presence today. I now request Mr. Mohammad Himayu Kabir, sir,
Good evening.
President SAFA, to kindly share his words of wisdom. Over to you, sir.
Thank you, Priyanshu for your, I will say that very I am humble and um, for your introduction. Thank you. My respected Vice President, C. Probin Kumar Jha, respected Chair of the SMP Committee of SAFA and the ICI Practitioners Committee, C. Madhukar Hiragangaji, and today's three distinguished eminent speaker, Professor Karthik Atmanathan, Mr. Arun Krishnan, and Ms. Sharbati Patki, and distinguished leadership and members of SAFA and the SAFA Assembly Committee of SMP Committee, leadership and members of the Members in Practice Committee of ICI, fellow professionals, and dear colleagues from across the South Asian region. Good afternoon to all. It is a great privilege to welcome you to the inaugural session of this multi-webinar series. This joint initiative by the SMP Committee of SAFA and the Members in Practice Committee of ICI marks a significant milestone in our collective efforts to build a truly future-ready professional practice across our member nations. By converging the critical discipline of climate financing, electric mobility, EV, and renewable energy solution, we are positioning South Asian small and medium practitioners, SMPs, and professional accountants, PAs, at the very forefront of the global green transition. At this core, the South Asian Federation of Accountants mirrors the global mission of IFAC. Our fundamental purpose is to advocate for stronger regional connection, networking, and deep collaboration among professional accountants across South Asia. We achieve this by driving the uniform and harmonized implementation of global standards, whether in financial reporting, sustainability disclosure, professional ethics, or public financial management. Our region stands at a unique and critical juncture. While we are among the most vulnerable geographies to climate change, we also represent some of the most dynamic, fast-growing economies in the world. To sustain this growth, transitioning to a low-carbon model is an absolute economic imperative. However, financing this green future requires astronomical capital, robust governance, and transparent reporting, and finally, the innovative business models. This is precisely where a cohesive regional approach is most expected and required. No single nation can navigate this massive green transition in isolation. Climate change management serves as a vital catalyst for regional collaboration. By utilizing SAFA as a vibrant platform for connection, we can actively share technical knowledge, exchange regulatory best practices, and ensure that our practitioners move forward together with a harmonized, unified understanding of the green economy. The comprehensive technical roadmap designed for today's webinar beautifully illustrates how macro level green initiative translate into direct professional opportunities for our members. As this new business model emerges, the role of the professional accountant permanently expands beyond traditional numbers. The global rollout of sustainability standards demand that we bring the exact same rigor, transparency, and ethical compliance to climate and carbon metrics as we do to financial statements. Through regional forums like this webinar series, SAFA aims to ensure that every professional accountant in our region is equipped to provide high quality assurance and advisory services. By harmonizing our approach to this emerging standard, we build regional capacity, enhance cross border practice opportunities, and position South Asian professionals as a trusted leaders in the global sustainable finance landscape. I'd like to express my sincere appreciation to the SAFA SMP committee and the ICI members in practice committee for collaborating so effectively to launch this timely series. To all our participants joining from across our member bodies, I encourage you to leverage this platform to network, collaborate, and share insight with your regional peers. Let us work together to harness these emerging opportunities, equip ourselves with technical expertise, and strengthen the accountancy profession across South Asia. Thank you very much, and I wish you all an enriching session.
Thank you very much, sir, for your words of wisdom. And we shall now move on to the technical session of today's webinar. And it's now my privilege to introduce our eminent speakers of today's webinar. So, Professor Karthik Atmanathan, sir, Ms. Sharwari Patki, Mr. Arun Krishnanji. So, first of all, our first eminent speaker is Professor Karthik Atmanathan, sir, IIT from IIT Madras, who will speak on the market context and the case of EVs. Uh, Professor Atmanathan ji is currently a professor of practice at IIT Madras and is also associated with the Office of Principal Scientific Advisor to the Government of India. He is the uh, he is the initiative director of e-lobby and aimed to initiative aimed at accelerating zero emission trucking in India. He has played a significant role in advancing electric mobility through academia, industry, government collaboration, R&D standards and standards development, skill and innovation. He has also contributed to the development of charging standards suited to Indian context and to the technical roadmap for zero emission trucking and e-mobility in India. We are having the second speaker, Ms. Sharwari Patki, Program Head Electric Mobility from Mumbai, who will cover important aspects relating to the SME EV business case, taxation, and incentives financing for small factories, loan advisory, risk, and new business models. Ms. Patki works with the Sustainable Cities and Transport program, where she leads engagement in electric mobility, including freight electrification and charging infrastructure. Her work focuses on strengthening the EV ecosystem through practical project delivery, policy research, and collaboration between academia, industry, and policymakers. And our third speaker for the day is Mr. Arun Krishnan, Program Director, Climate Financing from WRI India, who will address the participants on public transport and e-bus ecosystem and emerging business models. Mr. Krishnan has over 15 years of experience in deal advisory, climate finance, project finance, and public-private partnerships with a focus on urban infrastructure, transport, and sustainability linked projects. So I warmly welcome all the three eminent speakers for today's webinar, not taking much more of time now. And I would request Karthik sir to start with the proceedings. Over to you, sir.
Good afternoon, everyone. I hope you can hear me fine.
Yes, sir.
Yeah, okay. So I'm sorry I'm not keeping well. So there will be a little bit of coughing and blowing my nose during the session. Um, so don't be misled by the professor title. I've been a professor of practice only for 5 years, and before that, I was in industry. I was senior vice president and business head for Ashok Leyland for the e-mobility business, and before that, I was the chief engineer. Um, it's good to talk to chartered accountants now. I come from a family of chartered accountants, father, brother, sister, brother-in-law, the works. Everybody's a chartered accountant, and it feels nice for a change. Instead of hearing from chartered accountants, me talking to chartered accountants feels very good. Um, so I'm primarily focused on the commercial vehicle space now, electrification of commercial vehicles. But e-mobility, I think there are some generic aspects which, as practicing chartered accountants, a lot of you would want to know about and would want to know for sure. And essentially, I think we are hearing far too often that it is a new technology. It was a new technology about 7 years ago. It is a fairly mature and practical technology today, and there is no need to make fiscal or commercial provisions for the newness of the technology. As of today, the technology does not require any fiscal provisions for failure or for risks. So this is something which we will need our accountants to start practicing. And towards that, if you have any specific questions, very happy to answer them and clarify. In fact, in the commercial vehicle space, even perceived risk has been eliminated by the vehicle sellers, where they have converted that perceived risk to a cost, and they offer it as an annual maintenance contract for the electrical aggregates. So if you look at trucks, it's coming at about 4 rupees 70 paisa per kilometer, and it is everything. It includes battery replacement, it includes all repairs, everything, right? So if you incur that cost, your risk on the technical front is zero. The a similar point is, I'm sure you've seen a lot of these WhatsApp University fire videos where they show thing. This is because it's fascinating to see an electric vehicle fire. It's no longer fashionable to see diesel vehicle or CNG bus fire. If you remember when Delhi started CNG buses, um, every week you would keep seeing old videos again and again from different angles, and it's statistically very clear as of today that electric vehicles have lower incidents of fire as compared to petrol vehicles. So this is at a global level. In the Indian context too, this is fairly common, but unfortunately in India, we do not get the data. We do not get the data for diesel and petrol. But for electric vehicles, a lot of us are keeping track, and it is fine. So technology wise, the message that I'm trying to convey is that it is fairly mature and it is implementable, and it is time we started looking at the money part of things rather than have fundamental questions about, oh, is the charging infrastructure in place, oh, is it going to be a reliable technology, etc. So this is not something which is where there is any doubt. The technology is mature and it is robust and it is reliable, and in fact it's far more reliable than a combustion engine vehicle. So, given this, how does one make the money work. So I would give the example of uh, an LED light. I think that's a good example. So if you have an incandescent bulb in your house and you're having that lamp on for 20 hours a day because it's in a dark room and you switch it off only for 4 hours. In such a case, there is a lot of financial merit in spending more on the bulb and recovering that extra investment and putting it through savings in the electricity bill. This is the reason why a lot of street lamps have been LED converted to LEDs. The basic principle is higher capital cost and very, very low revenue cost. So your payback typically should be about 1.5 to 2 years for any businessman to be excited. I'm talking about direct payback. And if you look at an interest loaded payback, probably about 3.5 years, he should get his money back, especially if it's a new technology. So, in the context of trucks and buses, this figure is 20 lakhs per year of diesel per truck. So if you have a client, one of your clients, who's for whom you're filing returns or you're helping him with his decision making, um, if he's using trucks either through contracts or directly under in his books, if he's using diesel trucks and those trucks are burning about 20 lakhs of diesel per year per truck, he already has a business case to electrify with current costs. And if Mr. Trump continues to be kind to the electrification market, probably petroleum prices will go up even further, and we will see the break even continuously coming down further and further. So broadly, this is fairly established monetary figures, fairly established technology. The only gray area today is the financing of these assets. This is because of a lack of a resale market. So the lender, he is unable to uh, physically or realistically verify what would happen if he has to seize the asset, right? So we have a problem here. It was very heartening to see Ministry of Heavy Industries take this initiative since the last 2 weeks. It's as recent as that. And they're trying to partially write off this risk for the lender, and they're also giving an interest subvention, which is currently loaded because of that risk perception. So between the interest subvention and the risk cover, partial risk cover, I think the lender should be able to see merit in going into this business. Now, why should he do it? Basically, his book for the same number of vehicles, his book will be 3 times the size, 2 or 3 times the size. So if he's financing 10 diesel vehicles today and he finances 10 electric vehicles tomorrow, his book size will be 3 times. So it's a fairly lucrative thing for area for the lender to go in, as long as the resale price is clear to him, which currently it isn't, and this is a challenge for everyone. Um, there's a lot to communicate, but I think Sharvari and Arun will be covering a lot. And if you have any specific questions, I don't know what the structure of today's session is, but you can feel free to raise the questions, and we'll be happy to clarify to the extent that we know of. The bottom line is there's no looking back. Electrification is happening, and it's something for which in fact the finance sector will be the last sector. All other sectors, whether it's academia or government or industry or any all the other sectors have gotten into electric mobility. The finance sector has been fairly slow in this regard because of the size of the overall electric vehicle business. It's changing, and it's great to see that ICAI is now committing time and resources on this. Very happy to help you along with this process. I'm part of the Center of Excellence for Zero Emission Trucking at IIT Madras, and on the truck and bus front, any help that you may want, we are happy to provide you support. Thank you very much. I'll hand it back to the chair or Sharvari as it.
Thank you, sir. I think, I will take it forward from here. Thank you, Priyanshuji, for that introduction. And thank you to all office holders of ICAI and SAFA for your very kind and generous time. I believe that there are more than 250 members, chartered accountants, who have joined in online. If you have any questions, you can type it in, and Priyanshuji can communicate it to us. We can take the questions in the end. I'm going to share a deck. So just let me know if you're able to see it.
Yes, we can see it. You can make it full screen, please.
ठीक है.
Thank you.
Okay, great. All right. So I am aware that, I am addressing an all South Asia audience. A lot of the material will be kind of specific to India, but we have also tried and expanded it to broader South Asia as well. So please do bear with me. And also remember that 100 rupees is $1. It's a very approximate value, but I think we will hit that soon. So 100 Indian rupees is $1, right? So you can make your calculations when you hear Indian rupee. Okay, great. So we have, we have seen that electric vehicles are growing in globally as well as in South Asia. There is a statistic which shows that, in fact, the incremental growth of electric cars in Nepal is among the highest in the world. Because of the hilly terrain, and electric vehicles are very apt for the hilly terrain because of high torque. Similarly, other countries from across the world, you can see that incremental share, that is the share in this year or the share that will happen next year in the new sales for electric vehicles is growing rapidly. Of course, China has made massive progress in electric vehicles. They not only have, the manufacturer of electric vehicles, but they also control the battery and the value chain for the battery ecosystem as well. And therefore, they are also exporting to other parts of the world, including many countries in South Asia. India, we have, rapid growth in two-wheelers and four-wheelers, initially because of government schemes, both supply side and demand side. And now it has become like the personal use vehicles are growing organically. Commercial vehicles, India has a twofold story. One is the electric bus story, which is more, from government procurement. The other more important piece, I would say, is the electric truck story, right? Because that is one of the most challenging pieces of the puzzle. But also, if you solve that puzzle, it becomes better because the emissions from trucks, from diesel trucks, are a large part of transport emissions, not just in India, but anywhere globally. So here we see what is happening in the rest of South Asia, Bangladesh. You see, tens of thousands of EVs in operation. There have been, heavy-duty electric vehicles as well. Public transit in Dhaka has been 80% electrified. Electric government fleets are being electrified, and there has been, greater EV penetration. My understanding, and or the audience can correct me if I'm wrong, is that there's a lot of CNG vehicles in Bangladesh, right? Compressed natural gas. And Of course, the CNG prices are also dependent on the global market for gas. Therefore, because of the variability in pricing and so on, EV is becoming more popular. but also EV is becoming popular due to some technical reasons as well, right? And of course, income tax exemptions have been given, customs duties have been reduced, and registration fees have been lowered for EVs. Bhutan, there is a small and growing fleet of EVs. Hilly terrains are especially suited for electric vehicles, both passenger as well as cargo. So if you're looking at heavy duty electric vehicles, electric trucks, I mean for hilly terrains they are perfect, right? Because their torque response is that much better. Bhutan has also given some stops in terms of tax and so on for electric vehicles, and therefore the fleet is small and growing. Sri Lanka, newly registered vehicles, 15% are EVs, 10% of vehicle imports are EVs. Uh, by 2025, all state-owned vehicles have been electrified. Two-wheelers and three-wheelers. For South Asia, I think electrification of two-wheelers and three-wheelers is an important, part of the puzzle because we have a large amount of two-wheeler use, and two-wheelers are both easy and cheap to electrify, and electrification makes a lot of sense as well, right? You see that in China, for example, or in India, you see a lot of delivery fleet being electrified, a two-wheeler delivery fleet being electrified. So in order for the fleet to grow, you need to have financing to grow, and that is where the chartered accounting faculty will play a major role, because a lot of you either are with financial institutions or are in roles in industry where you can influence the financing, right? So, how does EV and conventional financing for conventional vehicles and financing for EVs, how does it differ, right? This is India-specific example, but let me try and explain it. So in India, and I think in other South Asian countries as well, you have banks which are owned by the government, having a majority ownership stake, and you also have smaller banks which are privately held, right? So what we see is that surprisingly, electric trucks are primarily financed by private financing companies in India, right? And perhaps this dynamic plays out in other geographies in South Asia as well. The reason being that, firstly, they have this deep niche expertise in financing, electric trucks. The second being that the large part of the fleet is unorganized. 75% of the fleet owners in India own less than five trucks, and therefore you call it an unorganized sector, a very diffuse, disparate sector. And the private financiers can take that risk, are willing to take that risk to finance them, right? So that's how it's been happening. EV financing, on the other hand, what we are seeing, and this is a global trend, is that first the organized sector players are getting on the technology bandwagon, and they are acquiring, electric vehicles, electric trucks, electric buses, and so on. So the organized sector players here includes, the government as well. And they are being financed by the larger banks, the organized, the larger banks, because the quantum of loans is higher, right? So that is the dynamic here. Um, you also see that the manufacturers themselves have financing companies. Okay, so if you're manufacturing an electric vehicle, your sister concern is a financing company which does vehicle loans. So they are also, financing these vehicles. And in India, you see a couple of startups in the EV financing space because it is relatively new. Established banks do not want to take that risk. You have a couple of startups which are both building the ecosystem as well as financing it. In parallel, you have leasing services as well because of the currently higher cost, higher capex in electric vehicles. Leasing has become an attractive option. Of course, it depends on the taxation aspect as well. But given the capex, leasing is attractive, and you see a number of leasing firms also come into EV leasing services. I will just touch upon this briefly. We have a lot to cover, so I will skip a few slides. So the difference in lending between ICE and EV is that ICE is internal combustion engine, also known as diesel or petrol engine, right? And so the difference is that the ICE lending market is extremely mature, right? So your a lot of financiers are basically underwriting the asset rather than the balance sheet of the company or the fleet owner, right? Whereas for EV, because the asset is relatively new, the secondary market is still developing. Secondary market means the market where you can sell it after the first user uses it. The lenders are not just looking at the asset by itself, even though the asset is quite robust, technology has improved. They are also looking at who the borrower is, what their profile is, and so on. So that's one difference. Loan to value, we are seeing a lower loan to value for electric vehicle, primarily because the asset value is so high. The electric vehicle is 3x to 4x the cost of a diesel vehicle. Therefore, the capex is higher. Therefore, the LTV, the banks are being a little conservative, is lower. Loan tenor for electric vehicle has to be longer. So we are trying to achieve that in India. Primarily, reason being that the loan quantum is higher, and the fleet operators require a larger time to repay it. Residual value certainty is still developing in electric vehicles because the secondary market is not there. There is a battery risk, but it is not a risk anymore, right? So if you read the literature, the battery technologies have more or less matured. There is still, of course, solid state battery and other advances, but the steep exponential technology curve is now past. Now, from now on, the only the exponential change can be from current semi-solid gel-based batteries to solid-state batteries. But the rest and all are incremental stuff, right? So I would say the battery risk is not much to worry about right now. Warranty alignment, the manufacturers are offering longer warranty because they have confidence in their product, and they're saying that we can stand by the product for 7 years and we can give you AMC, annual maintenance contracts, for 10 years, right? So that's because they have the confidence in their product. I will. We can deep dive into the e-bus ecosystem in case my colleague Avinash is here. He's an expert in buses. But if he's not yet here, then I will touch upon the truck and then we can come to the bus part. Priyanshuji, is Avinash joined?
Just check. I'll just.
Just 1 second.
You can continue in the meantime.
Yeah. Okay, then I will go to the trucks section. Okay. So we broadly wanted to touch upon two aspects, right? Because the time is limited. We wanted to touch upon heavy vehicle electrification, right? And in heavy vehicle, what you mean is trucks and buses. Why heavy vehicles? Why not smaller vehicles? Because smaller vehicles, firstly, we are seeing that they are organically growing on their own, right? You don't need special incentives or schemes or anything, at least not for a long period of time. People are adopting it by themselves, both because operationally it is cheaper, even though the initial capex might be slightly higher. But also the impact of smaller vehicles in terms of emission is lesser, whereas the impact of larger vehicle, heavy duty vehicles is much more. So each of your countries will have a nationally determined contribution NDC, which you have to submit to the UNFCCC, UN Agency for Climate Change. And there, the countries would have given certain commitments towards reducing emissions. And for transport, electrification is a major commitment different countries would have made. And in order to achieve that, you electrify freight, you electrify buses, and you electrify, railways. That's another question altogether, right? So that's why we wanted to focus on freight and buses majorly. So here I'll just deep dive into freight electrification. Okay, the share of road freight in India is around 71%. The share of freight, that is out of 100 percent of freight carried in India, 70% is by trucks, by road, right? So that means the trucks play a very important role in freight transport in India. The Although trucks only constitute less than 5% of the vehicle population in India, their share of emissions is 45%. Okay. So I'm sure the statistics in other countries are lopsided as well. Trucks typically constitute a very minuscule portion of your fleet, but their contribution to emissions is much higher. And similarly, their share of diesel consumption is also much higher. For example, in India, 64% of diesel that we have is consumed by trucks, right? So imagine the amount of forex that our countries are foregoing because of diesel trucks. So in terms of costs as well, right? In terms of maintenance cost as well as operating expenses, the incremental cost for battery electric trucks, BET means battery electric trucks, it is lesser than ICE trucks, diesel trucks, right? So BET has an advantage in terms of operating expenses today, right? So even though the capex is much higher, the OpEx of these trucks are lower. And over a period of time, when you consume 25 lakhs rupees, Indian rupee worth of diesel every year, that's around $30,000 worth of diesel or more every year, then these trucks make eminent sense. And similarly, if you sweat the asset more than 6,000 kilometers, 7,000 kilometers every month, then these trucks make eminent sense, right? So the 14 tonners, 35 tonner, 55 tonner, 28 tonner, these are different categories of trucks, medium and heavy duty trucks. And you can see what is the cost, Indian rupees per kilometer for the trucks versus electric trucks, right? So electric trucks are clearly better. The need for flight electrification, I've already explained. One is we depend a lot on imported diesel. It's an energy security story. Battery electric trucks will help improve the energy security of all our countries, not just India. Operational cost savings. So if you heavily sweat the asset, electric trucks make a lot of sense. And electric trucks also reduce greenhouse gas emissions, right? Especially, the gentleman from Nepal mentioned that there's a lot of renewable energy in terms of hydroelectric power in Nepal and in Bhutan as well, right? So imagine an electric truck which is actually powered by renewable energy. That is the ultimate dream when it comes to emission reduction. And a lot of countries will be actually very eager to have such a combination. India's grid is still primarily coal. So even there is electric trucks, but there is emission down the line. But ultimately, what people are doing is that setting up captive solar power charging stations and things like that, and also increasing the consumption of renewable energy. So what are the various barriers to freight electrification? I mean, this is a very complex diagram, but very simply, right? So some of the barriers might be because of technology. But what we believe and our research has shown is that the technology barriers have been mitigated, right? More or less. So 5 years back, you could say battery was a issue, but now it's no longer an issue. Battery technologies have matured. You can say that, how about the electric truck is a very simple thing when you compare to a diesel truck. The diesel truck has many moving parts. The electric truck has your chassis, which is similar to what a diesel truck is, probably slightly modified. It has the battery pack, it has the motor, it has the powertrain, and so on, which are all very simple, less moving parts than a diesel truck. So the complexity of a battery truck is much lesser. Um, and the technologies are becoming more and more indigenized, more and more cheaper, right? It is relatively easier to indigenize some of these technologies. So the other, challenges would be high capex, the limited range. But high capex is actually, the batteries as they mature and as there is scale in production, the cost of the battery pack, which is 40% of the cost of the truck, is also coming down. So you can imagine that the cost of electric trucks will also come down in future, right? So right now, if it is 1 crore Indian rupee, which is around $100,000, it might come down going forward, right? Then you have limited range. So basically, you require around 300 kilometers per, right? That is the maximum that can go in our subcontinental roads. I think in mountain roads, you require even less. So the trucks which are there have do more than 300 kilometers. So this limited range issue has also been solved. Electricity, the provision of power, right? The distribution companies should provide power for charging stations, right? This is a problem which needs to be solved. And in order to solve this, the countries should work closely with their discoms, with their power providers, and so on, so that this distribution can come to the respective charging stations. In terms of charging stations itself, for heavy duty vehicles, what is happening is that rather than depending on the government alone, the government, of course, has an important role to play, but private players themselves are setting up charging stations to meet their needs, right? So let's say, for example, you have a port. Okay, you have Colombo port. Maybe you have an industrial cluster outside of Colombo, and there is a manufacturer who wants to ship material between to and fro the port, right? So they themselves will set up a charging station in between as required, and for captive use, right? So that is also happening. So this problem of charging becomes solved, right? Um, then you have then you have other issues. So my point is that all these issues are slowly getting solved by different stakeholders, and by bringing these stakeholders together, like WRA India or COZET is doing. These stakeholders, we are bringing them together to solve these issues. Okay, so I am not going to go deep into these numbers except to say that so we have calculated the total cost of operation. Basically, how much does it cost to operate an electric truck over its lifetime, right? And how does that compare to diesel truck? The summary of that I had mentioned earlier about how battery electric truck is cheaper to operate than diesel truck. But this is the more expanded form of it, right? So we have done it for different trucking configurations. LCV is, light commercial vehicle, which does last mile delivery, the smaller trucks which you see. So you can see that when you see the graph on your right, the diesel truck's total cost of operation is in red, and the electric truck is the other two lines. And over a period of time, the cost of operation, the total cost of operation for electric trucks is going down. And similarly for other configurations as well, that it is going down, right? I am not going to go deep into this, except say that. So what are the applications for which we are seeing electric trucks, right? In China, the electric trucking market is all over the place, right? I mean, they are using it for n number of applications. In India, what they're doing is we are looking at very select sectors which are hard to abate, or there is a marketing element, or there is a engineering advantage, right? What do you mean by this? Hard to abate sectors are the sectors where the by itself they can't do they can't do much changes to become less emission intensive, to become more energy intensive, energy efficient, and so on. Cement, steel, etc. These are examples of. I'm sorry, just give me 1 second. My phone is continuously ringing. Just give me a second. Yes, once. Sorry. Okay. So I was talking about the hard to abate sectors. So these are sectors where like cement, steel, etc. No matter what the factories do, they can't reduce emissions. They can't reduce energy consumption. So what are they looking at? They're looking at scope three emissions. What is scope three emissions? These are emissions in in their supply chain, the logistics chain. They want to reduce scope three emission, and they can reduce scope three emission by introducing electric trucks, right? So that is why cement, metal, steel, these sectors are seeing increased adoption of electric trucks. When it comes to e-commerce and FMCG companies, they, of course, they're looking at the operating expense as well, but they are also looking at a marketing element, right? See, we are going green. So the Unilevers of the world, the Amazons of the world, the IKEAs of the world, they want to also showcase that they are green, they are socially conscious, environmentally conscious. So that is one reason for uptake from them. Then you're looking at ports, you're looking at mining applications and so on, where technically, the electric trucks are providing a better service than diesel trucks, right? Not only are they providing savings, but they are also technically performing better, right? So these are some of the reasons why electric trucks are being consumed, are in demand, at least in India. There have been a number of pilots which have happened. So whenever a technology is introduced, right, first you have the pilot stage where you have to prove that technology, prove the commercial viability, and so on, and only then will the uptake increase, the demand increase, right? So the pilot stage has already passed, I would say. In China, of course, they are much ahead. In India, what is happening is that over the last 2-3 years, a lot of pilots have happened. This is not an exhaustive list. The list is still bigger. These are the ones which are in the public domain. So they have run different configurations of trucks with load, without load, in different city pairs, and found out what is the cost, maintenance expense, operating expense. How does it perform under different scenarios, different temperatures, different climatic conditions, and so on. And they have done a comprehensive study, and it has been proven that electric trucks are performing equally good, if not better, than diesel trucks for almost all use cases. So, for example, the pilots which have been done, right? So you've had 50 EMHDT. MHDT is medium and heavy duty trucks, right? So 50 numbers of pilots across India. Now the number has increased even more, and these are the different sectors and different manufacturers which have done these pilots. So in cement, you have some of the largest cement players in India who have used 55-tonner trucks, electric trucks, to prove their use cases. In steel, again, you have some of the largest manufacturers. Ports, Adani Ports have deployed 400 BYD e-trucks. Um, and, for the PSA in Ports Authority of Singapore, in Mumbai Port, JNPT, they've also deployed electric trucks. And I'm pretty sure that in your ports as well, in Colombo and other ports as well, these electric trucks have been deployed. In retail, e-commerce, etc., electric trucks have become kind of mainstream, right? In terms of at least last mile delivery for the likes of IKEA and Amazon and so on. The other emerging use cases are cold chain, engineering and forging, construction, tippers, any use case where the uh, the circuit, the loop is known, there is reliable return demand, there is certainty of infrastructure, and so on. Those use cases are also adopting electric trucks in more and more cases. Municipal use cases for electric trucks, electric equipment are also there, like sweepers, garbage collection trucks, and so on. So that those use cases are also growing. So this information, it is in public domain, and we are also happy to share this information on what are the pilots which have happened and what are the configurations, etc. Right. So I will skip this. Yeah. Okay. So this is what is happening in another South Asia country, that is Bangladesh. So your target has been 30% EV penetration by 2030. And for freight, there is a e-mobility roadmap which has been done by World Bank. E-truck pilots in Dhaka, city logistics, etc. They are underway. So far, we don't have any fleet numbers. I'm happy to be updated on this. EV charging guidelines have been issued. Grid mix remains coal heavy, although I think the use of natural gas in your electricity production is also higher. But coal is still an important part of the grid in Bangladesh. No dedicated e-truck incentive scheme has been introduced. We believe that heavy duty vehicles, e-trucks or e-buses, requires dedicated financing schemes, right? And also government support. E-buses, subsequently, my colleague will explain about what we have done in India. But for e-trucks, because it is primarily private sector, the government schemes can only go so far. There has to be financing as well, and financiers have to create dedicated products for this. The barrier, of course, for almost all our countries is that a lot of these battery, the motor, etc., have to be imported. Unless we develop it indigenously, it will always remain a challenge. And I believe there's a high import duty in Bangladesh as well, which is preventing more uptake. In Sri Lanka, you have like 35,000, almost 35,000 EVs imported. After there had been an import ban, now they are allowing imports. But this is of both passenger as well as commercial vehicles. So this is not just electric trucks or electric buses. There is an ambitious NDC target of 10% cut in transport sector emissions by 2030, which is quite ambitious, and that can be achieved only by electrification, especially electrifying trucks, buses. There has been no dedicated e-truck scheme although the import ban has been lifted. Pilot projects have been planned by different organizations, including ICLE. There is no focused e-truck financing scheme. I think members in the audience, if you are in touch with the banks or the Ministry of Finance in your respective countries, you should suggest to them that there must be incentives and specific schemes for financing these heavy duty vehicles. In Nepal, Nepal has been a pioneer in electric vehicles in South Asia. So you have 350 almost e-pickups which have been imported. There has been a zero excise duty policy on EVs, lower road taxes, and strong import incentives. Um, Although the electric pickup, the Kama electric pickups have been imported, there is scope for larger trucks as well, right? Not just pickup trucks, but also medium and heavy duty trucks for Nepal. Almost 100% of the grid in Nepal is hydropowered. So I think amongst all South Asian countries, Nepal and Bhutan have the best chance of saying that they are literally cutting emissions by adopting electric trucks or electric buses. And diesel, of course, landlocked nations have higher diesel import bills, and energy security is also an important factor in adopting these electric vehicles. Gaps, of course, import dependence, infrastructure, etc., have to be looked into. And similar gaps apply for Bhutan as well, right? Although it is carbon negative, great strides have been made in terms of emission reduction and so on. But more incremental steps can be taken by adopting e-trucks, e-buses. Okay, I will now, go to buses, e-buses. Again, I'm just checking if my colleague Avinash has joined.
I'm here. I'm here, Arun.
Okay, Avinash, I'll just circle back to e-buses. Just 1 second. Yeah.
Hey, hi. Good evening, everyone. Uh, I think Arun has set the context. He talked about the e-freight, how's the journey being in India and other countries in South Asia. I'll quickly cover the buses. So, in terms of the public transport, these are the broad numbers, almost 40 crore people use bus in some form every day in India. And the total number of buses in India is around 23 lakhs. So that is the larger number, 23 lakh buses serving almost 40 crore trips every day. Next slide, please. Arun, you're controlling the presentation. Huh. So first we'll look into the public buses, like what are the different policy pushes that were provided for the public buses. So it started with a FAME in 2017. At that point of time, the support was extended to 400 electric buses. Subsequently, in 2019, the next version of FAME came in, which is the FAME 2. And in this, it was uh, uh, decided to support almost 5,600 electric buses. So the journey from here, when the support was extended for 5,600 buses, few cities they have started procuring the buses. The experience was not that great in terms of the uptake and the running of the buses, and also the prices that we were discovering in terms of the procurement. It was relatively higher than their counterparts, which is their ICE counterparts. So therefore, this journey I would say, stalled for a bit. It needed a lot of discussions around how we can ensure that the cost parity is there, the uptake is there. So this is where this entire demand aggregation or the grand challenge comes in. So as part of the this grand challenge exercise, uh, uh, the learnings were sort of highlighted. What's the experience? So in the subsequent slide, I will show you like what are the learnings and how India overcome it. So then this was the grand challenge part of it. In 22, this is a national electric bus plan was announced, where it was decided by in next 5 years, which is till 2027, almost 50,000 e-buses will be there. So if I talk about like where we are in 2026, almost 18,000 e-buses are on road. Uh, Another 35,000 are in different stages of procurement. So I would say key by 2027, this target of 50,000 is more or less will be achieved well within the time. In 2023, PM e-bus Seva scheme was announced. This is another national scheme which was intended to support 100 more than 100 cities with 10,000 electric buses. Then in 2024, a subsequent part of FAME, which is like the PMA drive, was announced. In this scheme, another 15,000 e-buses would be supported, and this 38,000 e-buses will be supported via a payment security mechanism, which is to de-risk the procurement of electric buses. So that is what the policy landscape in terms of public buses looks. So what this resulted in? Next slide, please. Uh, okay. So this is where, between 2019 and 2021, when the FAME 2 was announced with the support to almost 5,600 buses, but still the procurement was not happening or the cities were not procuring the buses. These are the few of the important learnings that came out based on our interactions, on the discussions with different stakeholders. One of the biggest hurdles that the OEMs have highlighted was the number of the buses that were up for the tender. They are quite low, so like 100, 200 buses per city. So this doesn't give them that impetus to start their manufacturing or to start looking at a larger scale. So what they highlighted was if there is a clear cut visibility in terms of a demand, then they will be more aggressive in pursuing these opportunities. So they requested or they asked basically, yeah, what is the higher number? Like, what is the policy direction that the country is going on? So there is no clarity towards it. And this all leads to the higher prices. So basically, one is the lot sizes, then the homogenization of the, I would say, the product. Different cities, they requested for different type of buses. So there was no standardization. That is another, and standardization in terms of procurement. Now, so all the cities were with different conditions, different financials, all those things. So that standardization was not there. So these are three or four major sort of learnings. So all these learnings, what leads to is towards the demand aggregated procurement, where like the larger bucket is created using the demand from the individual cities. So the individual cities who are requesting for say 100, 200, 300 buses, now all this demand for holding a single bucket so that the bucket size increases. And there was the standardization of product as well as the procurement conditions. So what this led to, next slide, please. So the first grand challenge, it happened for the five cities, New Delhi, Surat, Bangalore, Hyderabad, Kolkata. All put together, there were around 5,400 buses. So at that point of time, it was the biggest e-bus tender that happened. And the prices that were discovered were relatively much lower than their ICE counterparts. So that clearly shows or clearly establishes the cost parity. Not only the cost parity, but also it is relatively better. So even if we remove the subsidy part of it, like the support that were offered by the central government, even then it was relatively much cheaper than their ICE counterpart. So this is where the announcement of National Electric Bus Plan happened, which targeted 50,000 electric buses till 27. Next slide, please. So now if you see this is what the a single chart that clearly shows the impact of demand aggregation. If you look on the left-hand side, like before 2022, when the cities were individually procuring the buses, at that point of time, the rates that were discovered were somewhere in the range of 85 to 100 rupees. Subsequently, with demand aggregation, that rate came down drastically. So this is the same trend. Even if we add the latest numbers, the buses that were procured in 2025 and 2026, the similar trend is visible. Next slide, please. So this is about the procurement. What I would also like to show here is with an example of a Bangalore. Even so, all the public bus procurement, it is on the service model, which is like the public entity procuring the services against which they are paying the, I would say, the bidder or the operator or the consortium who is winning this bid. So in this, the main takeaway from this chart is this is the case of Bangalore. This is the four different procurement that happened over the years, part of different schemes from FAME 1 to the latest scheme. The takeaway is, given the conditions, whatever the scenario is, even the private sector lending or the commercial lending has came into this sector. Initially, the commercial lending was not happening, but it clearly shows like all the different procurements, whatever the type of procurement under whatever a scheme, there is consistent backing from the private sector funding or the banks, I would say. So this is, it demonstrates it. So if we look like the different schemes, so there was like SBI, Exim Bank, Hinduja Group Bank, HDFC Bank, So all these banks are now willing to put money into this sector. This is before 2024, the announcement of the payment security mechanism. So now with the payment security mechanism coming in, which basically de-risks the payment, sort of a de-risking instrument, more and more financial or commercial capital is coming into this sector. Next slide, please. So far we have seen the public bus sector, but given the context of Indian scenario, the public bus sector is only the 7%, only 7% of the overall market. So for the transition to or the electrification of the public buses, it is very important for even the electrification of private buses. And what are the major barriers in this? Is the high upfront cost. I would say the market is highly fragmented. A lot of small operators with very small number of fleets. For them to sort of cater to this high upfront capital requirement and the backing for financial institutes to put money in, it's quite difficult, and that is one of the biggest barriers. In terms of range, I would say currently we have a product which caters up to 400 or 450 kilometers, but for the intercity buses that caters to higher distances, there is no viable product available. So that is another hurdle. Inadequate charging, unviable financing options, and uncertain battery replacement costs. So these are the major hurdles, I would say, in terms of private bus electrification. But of late, next slide, please. But of late, there are few examples where the private buses are getting electrified, and these are the newer segments, like the technology-based services, the Nugo, the Fresh Bus. So these are the companies, the private companies who are operating this services, whether it is intracity or intercity. And most of these companies are backed by VC or some sort of a debt financing tools. So this is the emerging pockets of demands, and there is a case where even the electrification of private sector is happening. Next slide, please. Okay, so this is more or less the India context, but if I look into the other South Asian countries also, I would say the countries Sri Lanka, Nepal, Bangladesh, Myanmar, the number of e-buses currently on road are relatively much lower, less than 1,000. And there are different types of business model. So similar to India. So largely there's no slide for it, Arun. I'll just quickly convey it. If needed, we can provide those details at a later point of time. So in terms of the procurement or in terms of the business model, similar. So it is like either a public procurement where the government put all the money, they take all the risk and they operate the buses, or it is a lease model, or it is a service contract similar to what India is doing, and the private sector. So these are largely the business models which are prevalent in South Asian countries as well. So this is related to the e-buses. Any specific questions, any details that the team would like to discuss? Happy to contribute.
I think the questions will come at last, Avinash.
Oh, sure, sure.
So
Okay,
yeah,
okay.
I will continue with the next section.
Okay, okay.
Okay, so let's look at some emerging business models and also, what are the opportunities for chartered accountants. You see this network map on your screen. Okay, so the ones in green are existing ecosystem players, right? Whereas the ones in purple are things which are coming up new due to electric mobility. So battery makers, battery dealers, battery recycling, retrofitting of vehicles with batteries. These are some of the newer areas. Okay. Utilities, charging stations, swapping stations, these are also something new. The rest of it kind of pretty much remains the same, but with some slight modifications. For example, when you look at finance, Of course, you have the financing firms, leasing firms, and so on. But the products which they offer, the tenor, the risk profile, etc., keeps changing because of electric mobility, right? The business models for electric trucks and to a lesser extent electric buses as well is basically you have these, most of our fleet owners in South Asia are small fleet owners. They own less than 5 trucks among themselves. And they get aggregated by more organized sector players. The organized sector, large players are very few and far in number, right? Although these specific statistics are for India, it holds true for the rest of South Asia as well. Now, the idea is for electrification, especially for heavy duty, the hypothesis is that the more organized sector players will first electrify, right? Because they have the balance sheet, they have the risk-taking ability, and also their consumers, the shippers who they serve, like the Unilevers of the world, they demand electrification, right? And therefore, it will be the large fleet owners who will electrify first, and then slowly it will trickle down. So some of the models which are emerging, which are interesting, but not widespread so far, is that first is battery as a service or battery leasing. So basically, you're splitting the chassis, the body of the vehicle away from the battery, and you're financing them separately. Okay, the body of the vehicle is much more proven. It is much more. There is continuity between diesel vehicles and electric vehicles when it comes to the body of the vehicle. But when it comes to the battery, the drivetrain, etc., there is discontinuity. These are two different technologies. So what happens when you split them? You can offer the battery alone as on a lease or you can charge them on a per kilometer basis. For example, MG Motors in India, they have brought out some car models where you buy the car upfront at a lesser price, but you pay per kilometer for the battery use, right? You get billed every month, depending on the number of kilometers that you run, and you pay that. So that is battery as a service. Battery swapping models are also being demonstrated, but I do believe that they need to mature. They need to mature a bit more. Leasing model or subscription model for, of course, commercial vehicles, it has been prevalent model. And for EVs especially, I think given the capex for EVs, it is a better model than upfront ownership. And therefore, you see leasing models growing as well. Fleet as a service, it's a mix between leasing model and as a service model. It's basically an asset-light model where you don't own the fleet. The company which owns the electric fleet will provide logistics to another company under the badge of the other company, right? So the logistics player is asset-light. They will then draw upon fleets from different service providers as required. So when you do this, truck as a service or battery as a service, there is an upfront reduction in the cost, right? If you're going to lease the battery alone, the battery is around 30 to 40% of the cost of the vehicle. So leasing that alone will reduce the upfront cost. Therefore, there is lower EMI burden, lower operating expense, and so on. Similarly, when you lease the entire vehicle, of course, you don't need to undergo the capex. You merely pay for the OPEX, right? So there are multiple contracts which allow for that and which are being developed. For buses, there is the gross cost contract, which Avinash explained. In fact, Avinash played a role in developing of these contracts as well and the subsequent RFPs, right? So for municipal buses, this is like a gold standard. and I believe other countries have implemented it as well, where it's like a public-private partnership, right? So they provide a fixed cost per kilometer with a minimum utilization guarantee and things like that. So this has really improved the uptake of electric buses among for public service, but the private bus challenge still remains. In many ways, the private bus challenge is similar to the private truck challenge, right? You need utilization, you need infrastructure, and things like that. Okay, so where do you, as a CA, I mean, we have looked at the at broad strokes, right? There is the national policy, there are financing firms, there are leasing firms, and so on, right? And there is a lot of work to be done there. And I'm sure some of you who are in those positions will go ahead and do that. But let's also talk about what is the impact of electric vehicles on smaller towns, okay, on MSMEs, right? And how those of you who serve the MSME market or who are in tier 2, tier 3 towns, smaller towns, what is it that you can do? Okay. Now, you know that electric vehicles are growing both due to supply and demand incentives by the government, although these incentives, which are shown on the screen, FAME 1, FAME 2, etc., these are India specific, but we have also seen incentives for other countries as well. And because of that, electric two-wheelers, four-wheelers, auto rickshaws, etc., are growing, right? Now, and the growth in these electric vehicles is paralleled by growth in manufacturing or assembly of these electric vehicles, and also lenders, okay? Not just traditional lenders, but new age lenders, which are focusing specifically on electric vehicles. You've seen a growth in that as well. Now, we have seen a lot of use of electric three-wheelers for cargo, right? Imagine a bigger auto rickshaw, okay, but used for cargo instead of passenger. Okay, we have seen a lot of growth in that space, and even from a operating expense perspective, it makes a lot of sense. You can see the total cost of operations curve on your right-hand side, and you can see that immediately it starts making sense when compared to a diesel cargo vehicle. The diesel one is shown in red. Okay, and all of our countries have some configuration of these electric three-wheeler cargo vehicles. So the point is that these three-wheeler cargo vehicles are being used by MSMEs. I can give you a very specific use case. Surat in India is a cluster for textile manufacturing, right? And there are various value-added activities happening in different parts of the town. And electric cargo vehicles, right, are used for transporting goods from one place to another place to another place. It keeps happening, multiple tons per day, multiple times per day, right? Now, we have done the calculation and we figured out that electric three-wheelers make more sense in that use case because of both cost as well as operating parameters, right? So this is a pilot which we conducted. So then we tied up with the industry body, okay, to encourage them to, ask users, ask industry players to adopt these electric vehicles, electric three-wheelers. So I think this is where, as chartered accountants as well, I'm sure you will be in touch with a lot of industry associations, if not the MSMEs itself, right? So if you are able to develop deals between manufacturers, bankers, industry association for bulk adoption of these vehicles, right? Of course, after doing a proper pilot or after reviewing the numbers and so on, you're not doing marketing, you're doing an analysis and then showing them that this makes sense. Then you can possibly, bring deals to the table for these manufacturers, industry bodies, so that they can adopt these vehicles, which makes sense. In terms of taxation and interest as well, different countries have introduced certain provisions for taxes, levies, duties, etc., for electric vehicles. It might be a downright waiver, it might be a reduction, it might be accelerated depreciation, etc. Right? For example, India have allowed acceleration depreciation for commercial electric vehicles. Right? These are all non-monetary ways in which the adoption of these electric vehicles can be accelerated. Now it is up to you as chartered accountants to explain these benefits to your customers, okay, to your companies, MSMEs, industry bodies, etc., so that the advantage of electric vehicles can be brought forth. Again, whenever I talk about this, I'm not talking about marketing, right? What we have seen is that technically, from a commercial point of view and so on, EVs do make sense. Of course, the use case matters and so on. So CAs like you will have to do that analysis and show that to your consumers, to your customers, that it makes sense, and then play a role in the subsequent deals which happen in buying these electric vehicles, adopting these electric vehicles, preparing the books to avail the benefits for these electric vehicles, the subsidies, the tax write-offs, and so on. Preparing your MSME customer to avail them and to benefit from them. These are some of the duties and taxes reductions which have been given for electric vehicles. I'm not going to dive deep into it. I believe that you will have knowledge of these. But every country in South Asia has been implementing this in some form or another, right? So it is up to you to generate this data in terms of savings for customers and then ask them to adopt EVs. So, MSMEs includes factories as well, right? Industrial hubs, not just traders, but also industrial hubs. And across South Asia, you find a lot of these industrial hubs. It might be textile clusters, agri-processing hubs, MSME estates, and so on, right? So there are several analyses which you can do, including the total cost of operations, and show the benefit of electric vehicle adoption that I already spoke about. But also, how can the MSMEs avail of these benefits in terms of loans, in terms of concessional financing? There's a lot of concessional financing which is available, credit guarantees which are available for electric vehicles. In India, it is CGTMSE or SIDBI's Evolve program. And similarly, there are other programs in other geographies as well. How do MSMEs benefit from that? That is something which I think chartered accountants have to play an important role, both in terms of sensitizing them, but also in terms of helping them apply for these loans. Similarly, preparing their books in terms of accelerated depreciation or any other, schemes, CAs have an important role to play. How do you allocate freight cost, right? So your cost buildup will have certain allocation for logistics and trucking as well, right? So can you actually dig out that cost buildup and then compare it with electric vehicles? How does that compare and show the benefit? Then that can be an important role that CAs can play as well, right? In terms of other countries, Bangladesh, ready-made garments and garment factories in areas like Gazipur, Narayanganj, they use e-rickshaws for intrastate logistics, right? So there, you are already doing this, where electric rickshaws are used for intrastate logistics, similar to the Surat textile cluster in India. And I'm sure there are such similar textile clusters or any other clusters, MSME clusters in other South Asian geographies which can benefit from it. CAs prepare mandatory CA certificates for SMEF. SMEF EV loans are a scheme in Bangladesh which covers fleet purchases. So, of course, chartered accountants have an important role to giving the certificates that it is used for EV purchases only. Similarly, other countries, Pakistan's AEDB EV policy covers three-wheelers for industrial use. See, this is a big and growing use case in South Asia. You also certify accounts for ZTBL fleet loans for small agri-processing factories. Nepal's NRB concessional EV directive exclusively covers cargo E3-wheelers. CAs are the gatekeepers for bank loan certification. Okay, so if you are not already aware of it, or if you see a use case, I would encourage you to approach the industry body and see how you can get this started so that you can benefit, but the larger ecosystem can benefit as well. And of course, you have the EV plus solar integration as well. So, the EV story is not complete without renewable energy. Okay. So, how do you bring that renewable energy? Either the government does it or the private sector player themselves put up some renewable energy captive power plant for electric vehicle fleets. Every government has introduced some sort of scheme for electric vehicles. And here again, chartered accountants play an important role in interpreting what are the subsidies available, how they can be availed, and implementing, and getting the subsidies for MSMEs and your customers. So in India, you have the rooftop solar program, which provides subsidies up to 3 kilowatt, and PM Kusum scheme, which is basically for solar powered water pumps, which has been a great success, and similarly other schemes as well. Similarly, Bangladesh has an industrial solar program and a green refinancing program by Bangladesh Bank. CA certifies energy audit and financial projections for SREDA grant eligibility. So there is already all these statutory requirements for which CAs are required, and therefore it is up to you to consider this and to increase your own market. Similarly, for other countries as well, right? There have been subsidies which CAs have to help avail, right? So the edge of CAs is that no other local professional can handle tax savings, subsidies, and loan advisory into one engagement for a factory client. By factory client, I also mean MSME clients and other similar clients, right? So you have all the aspects of the toolkit. So to act as a single point of contact to help MSMEs, industry bodies, and even large industrial players move to electric, right? It can be electric mobility, it can be electric energy, renewable energy, and things like that. Okay, loan advisory is another part where CAs can play an important role. There have been schemes such as the one which you're seeing on your screen. SIDBI is the Development Bank of India, Small Industries Development Bank of India. World Bank had given them $125 million for a partial risk sharing facility credit guarantee for on lending for electric vehicles, right? So this program has developed, and similarly, the other countries are also will have similar such programs. So it is the role of the chartered accountants. Okay, you see these other programs on your screen. So Bangladesh has SME Foundation EV loans, right? Subsidized EV loans for CNG to EV conversions. Bangladesh Bank refinancing scheme I already mentioned, and SREDA incentives for solar, right? Sri Lanka and Nepal, DFC Sri Lanka EV loans. So the government of US is providing through DFC credit guarantees or subsidized loans for electric vehicle. New Development Bank and BOC Green Vehicle Finance. So you have that. Nepal Rashtra Bank in Nepal, concessional rates for EV lending, right? And similarly in Pakistan, Myanmar doesn't come under SAFA, I believe. But we have listed that as well. But anyway, so every country has this concessional EV lending scheme. Okay, it can be for individuals, it can be for MSMEs. It is up to the CAs to help companies or individuals get these loans. There are also tax write-offs for individual in different countries for buying an EV, right? So when you prepare tax statements, that should also be considered. Yeah. So for the program in India, the SIDBI Evolve program in India, chartered accountants prepare Evolve eligibility dossier, which includes a business plan, financial, fleet production, etc., for operators, and they charge for this. Preparing this, you get a service fee. Similarly, for preparing, for filing collateral-free MSME loan applications and link clients to PM eDrive Seva, you get a fee, right? Similarly, for state level nodal agencies as well. So you can start looking at what are the potential opportunities in writing these loan applications, right? Similarly, for the other countries as well, I listed out what are the loans which are available. So chartered accountants play a role in writing out these loan applications and making it successful. It can be a success fee based model. And similarly for residual value advisory, right? So you have the guidelines for depreciation and so on are still evolving, okay, for battery and so on, where battery has a second life. After it has been used in a truck, it can be used for other applications as well. So when that happens, how do you really think about, how they depreciate, what is the end of life value, terminal value, and things like that. So you should be ahead of the curve in such things and advise companies on battery depreciation, lease accounting, end of life valuation, and so on for electric vehicles. I will very quickly touch upon this. Maybe we have like 15 minutes for questions. So there is nothing incremental in this slide. I've already spoken about lease. I've already spoken about trucking as a service, battery as a service model. Debt instruments I briefly touched upon. So we cannot look at only concessional loans forever in the EV segment, right? At some point, it has to come to full commercial loans. When it comes to two-wheelers and two-wheelers and four-wheelers for personal use, we have already crossed the threshold and it's become purely commercial. There are a few pockets of subsidies for these, but commercial lending has really picked up in these segments. For heavy duty trucks, heavy duty buses, that is where you still require some handholding in terms of concession loans and other subsidies before the commercial bank loans become fully operational, right? So that is a process. It will take a few more years, but we do believe that in a few more years, retail lending for electric trucks will become mainstream and they will be just like any other asset on the market. This is just a aggregation of the different kinds of financing, asset financing, blended financing. Blended financing is basically mixing a concessional rate of interest with a commercial rate of interest to get a sub-commercial rate, right? So that is one way of doing blended financing. But you also have credit guarantees, etc., which also help with expanding coverage in terms of loans, but also decreasing interest rates in some cases. Aggregation model is what we spoke about for the bus aggregation, right? So the more you aggregate, the more the value of the loan becomes, and the lenders might also become more comfortable, and there is some discounts for the procurers as well. Here again, I think chartered accountants can play a role. You go through an industry body, an MSME or a group of MSMEs, you aggregate their demand, pool their demand, and then you can negotiate with the manufacturer for a reduced rate, and you can negotiate with banks for a better interest rate. Leasing model, I did explain a bit. I'm not going to get into this. Avinash has already explained GCC, but I will talk about the payment security mechanism which we have in India. Okay, so the state transport units, which are basically the government bus operators in India, are bankrupt, right? They don't have any money. So if they float tenders saying that I want electric buses, nobody will answer the tender. So what the government of India did is, one, it aggregated demand across different cities. So 20 cities, 20 plus cities, it aggregated demand and it issued a one tender for this huge demand. That was number one. Number two, the government also said that I'm giving you a payment security mechanism whereby if the state transport unit doesn't pay, public transport operator doesn't pay, then I will escrow some amount from the state's finances and I will pay you directly. Right? It's a very powerful mechanism, right? It's like an atom bomb. So they will directly claw money from the state treasury and give it to the private sector operator, right? So this worked fabulously well. Okay, this is the kind of payment security which private sector dreams about, right? So now they know that they'll get paid no matter what. So then more and more players started bidding, and it's become quite successful. This may not always be possible, but in case of municipal buses, municipal electrification, it has worked well. And this is an example of leasing which has worked. Macquarie, which is a Australian bank, they got around $200 million from the Green Climate Fund. And here again, I think chartered accountants have an important role to play. You can work with governments, you can work with banks to raise funding from a Green Climate Fund and others as well, right? Green Climate Fund is a quasi-government intergovernment entity based in South Korea, and they provide financing for as the name implies, green and sustainable uses. So you can fill in the application on behalf of the government, and you can charge a success fee or a fixed fee or whatever if they get some financing. So Macquarie got this amount and they plowed it into this entity called Vertello, which then used the money to buy electric vehicles on their books and started leasing it out. Initially, they started with cars. Now they have moved to buses. Now they are considering trucks as well, right? So leasing is a very good model, which has good chance of working in electrification. And hopefully you can work on some of these models as well. Okay, with that, I will end. Sorry, it's been multiple areas. Probably you're a bit confused. So we are happy to take questions on over the next 15 minutes. Over to you, Priyanshuji.
Okay, thank you so much. Uh, I think most of the members today have attended this. Around more than 300 people are there in this webinar today. So most of the people, I think they are thinking that we are doing something on EV motors and everything. So I think the questions are related mostly to normal questions. So I'll take some of the other questions, which are two or three. Given to the high cost of the capital in South Asian markets, how does the total cost of ownership of heavy electric commercial vehicles currently compare to the traditional diesel fleets? And what is the realistic break-even time for a mid-size logistic firm? You are on mute. You are on mute.
Okay, for TCO, I will put on screen the TCO calculations which we have. Just okay. So this is for the smaller vehicle, the cargo vehicle. Oh, sorry. I think. Okay. Anyways, I can't seem to get to that slide, but I'll try and answer it. See, it is about utilization and sweating the asset, right? So your rule of thumb, and I'm talking about um, the larger trucks which you see on the road, your rule of thumb will be around 6,000 plus kilometers per month, slightly more, 7,000 plus kilometers per month if you run, or if you burn more than um, 25 lakhs, that's 25 lakhs Indian rupees is around 10, 20, 25, around probably $25,000 worth of diesel. Okay. Then electric trucks make sense, right? So you can break even within 2, 3 years. Okay. But if you're going to utilize it less, okay, then it does not make sense, right? I'm talking again about medium and heavy duty trucks. So when you say medium sized operator, what is the size of the fleet we are talking about? Okay. Medium sized operator in India might be different from medium sized operator in different geographies. So let's assume that the operator has 10 different trucks. The way they operate is usually they take a truck on loan, they take a few trucks on loan, they repay back the loan, they take a few more trucks on loan, and so on. That's how they slowly build the fleet. So they're not going to electrify the fleet at one go. Even if they electrify, they'll probably get a few vehicles and then they'll slowly build up that fleet. Okay. So I mean, breaking even for them is a ongoing process. It's not going to be that the entire fleet is electric and they're going to break even. They will slowly look at the numbers and decisions when they think they will be able to utilize it to the maximum. Utilization, sweating the asset is key when it comes to electric vehicles. So I don't know if I have answered it. Um,
Okay.
I
So,
will also
Yeah.
request
Arun, let me just intervene
others.
here.
Yeah.
I think the context is cost. So essentially, it is fairly simple math. If you're not running the vehicle enough, or better still, if you're not burning enough diesel, that's the entry which you make in your books, not the number of kilometers. So if you are not spending enough on diesel, don't electrify. It's not worthwhile. And it appears in the Indian market, at least about 30% of the existing truck market, which is all of 300,000 to 400,000 trucks. 30% of the market is already financially viable. They consume enough diesel per year. So if you focus on the amount of money spent, it becomes easier rather than looking at asset utilization as a percentage or distance traveled. So I would recommend focusing entirely on the amount of fuel cost per truck. And TCO, it is expensive. I explained it. Probably you missed it. It's like the LED lamp. Your capital cost is higher, your revenue cost is lower, so your TCO starts making sense when your revenue cost reduction is enough of an advantage to offset the capital cost penalty in your total cost, right? So it's a fairly straightforward math. Happy to take you through. We'll do that in another session or an independent session.
all right, sir. Thank you so much. So, this one's from taxation and cross-border duties. How do varied tax borders such as GST variations in India, VAT in Bangladesh, and differing imports tariff on battery cells across the SAARC region impact the financial visibility of establishing a streamless cross-border electric freight corridor?
I think if the freight corridor has to be seamless, the tax corridor has to be set right. Otherwise, it doesn't get sorted out. I can understand the problem, but the problem, the solution, I think, is more with government policies. Of course, one nice thing is that when you transact internationally, then your local taxes disappear. That's all of us know. But it's very unfair to expect a smooth cross-border logistics when the taxation is not really structured for smoother operation. We need to work like EU. I think that will make a lot of sense. We haven't yet gone there. We have a strong sense of partnership and brotherhood, but we are not showing it as policies at a government level.
The next one is financing and capital structuring. Traditional lenders in South Asia often view commercial EVs as the high risk assets due to the lack of secondary market data. What innovative financial instruments or blended finance models, example for first loss guarantees, green bonds, are required to lower the cost of the debt for fleet operators? Sorry.
Arun, can you take that, please?
Yeah. Okay. So I think, firstly, we need to question why you need to lower the cost of debt, right? I mean, it's a form of, you can say, subsidy or incentive for EV adoption, for electric truck or EV adoption, right? If the other subsidies which the government offers, both demand side and supply side subsidies, if they themselves spur the adoption of EVs, adoption of e-trucks, then maybe you don't need to subsidize debt. You don't need to provide concessional debt, right? But in case you do, then of course you do have the World Bank, you have NDB. NDB is active in different geographies in South Asia. World Bank is especially active here, right? So the development banks of respective countries should look at tapping into multilateral funds to provide any substantial concessional pool, right? So the World Bank, I mean, they will lend at their market rate, but their market rate is not what the commercial market rates in different countries are. It will be lesser, right? Or they can even provide a guarantee pool or something like that. So the respective development banks have to tie up with the multilateral bank, create a substantial enough pool, okay, so that the banks down the line, the commercial and public facing banks, they will be able to offer some concessional loans for electric vehicles, for electric trucks, and so on. Or maybe even provide structured debt or provide project financing at a concessional rate. Project financing, in fact, is a very useful vehicle when it comes to EVs, heavy duty EVs, and so on, right? We saw the GCC model, that is kind of like a project financing model. But even for trucks, we can look at bundling assets together, be it charging station, land, the contracts you have between logistics providers and shippers. So all of that can be bundled together, ring fenced as a project, and then project financing can be tapped into. Project financing is typically longer term, relatively lower interest rate financing. So that can also be looked at, right? So these are some of the approaches I think we need to look at. But I do believe that we need to see if it makes sense even without concessional lending, because concessional lending is a crutch. Eventually, you will have to come to commercial lending.
All right. Thank you so much. I think it's time now. We have to close the session for today. So, as we come towards the conclusion of today's webinar, it's my privilege to propose a sincere vote of thanks on behalf of the members in Practice Committee of ICI and SAFA Small and Medium Practice Committee. I expressed my deep gratitude to Mr. Muhammad Humayun Kabir sir, President SAFA, for the gracious presence and words of wisdom, and C. Praveen Kumar Jha sir, Vice President SAFA, for his opening remarks. Sincere thanks to C. Madhukar Hirgange sir, the Chairman, Members in Practice Committee, for his guidance, leadership, and continuous encouragement. We also place on record the heartfelt thanks to the eminent speakers, Professor Karthik Atmanathan sir and Mr. Arun Krishnanji and his team for sharing their rich knowledge, practical insights for forward-looking perspective on electric mobility, sustainable finance, and emerging professional opportunities. We thank the leadership of ICI and SAFA, the SAFA SMP committee, and all officials who had made this webinar successful. And most importantly, thank you to all the participants from India and SAFA countries for joining us today and their active interest in emerging area. So with this, we formally conclude today's webinar. Thank you very much. Have a great evening. And Avinashji, very thank you. We are also thankful for your session also, taking this in absentia of Sharwani Patki madam. So thank you so much.
Thank you. Thank you. Look
you.
forward. If there are any specific things
Thank you.
related to buses or trucks, feel free to reach out.
Sure.
Thank you.
Thank you all.
Thank you.
Bye bye.